McCarthy with Home Smart Preferred Realty in Salida, and I'm here with Jess Fisher with Peak View Mortgage in Salida. And we're going to talk to you a little bit about what the conditions are to purchase a property, primarily in Chaffee County, Colorado, this coming winter of 2023, and then compare that to what the conditions will likely be in the spring, summer of 2024. So we're just going to outline what that looks like. All right, thank you for joining me today.
Absolutely.
So I actually just got the numbers today for September of 2023, and we're already, as we were already feeling, the market has slowed down quite a bit. We're seeing fewer homes come on the market, and there were fewer closings as well. So we were already shifting into that fall slowdown that is historical for this area, particularly in our mountain area, but kind of nationwide as well. It slows down in the winter. And so that's where we are in the market. Will you share with us, please, what's going on in the mortgage rates in the mortgage industry?
Yeah, rates right now have been unfortunately increasing.
Okay.
So we're seeing rates 7.5 to 8.
Okay.
Kind of depending on what loan program you're looking at, how
Sure.
much of a down payment, credit score, that kind of stuff.
Okay.
But we have been, in the last couple of weeks, been in an increasing rate environment going into the fall.
Going into the fall. And so what are we, nobody has a crystal ball. So these are kind of educated guesses, I'd say. What is it looking like for the remainder of the winter? So the end of 2023, beginning of 2024.
So what's being predicted is that rates are going to relatively stay the same as they are right now for fall winter.
Okay.
Possibly a slight increase, but kind of depends on what the macroeconomic events are that are going around the world.
Sure.
But with that being said, there are predictions for next year of rates coming down.
Okay.
Now there's varying degrees of when people think that that's going to happen.
Yeah.
But for next year, generally speaking, if you kind of look at the median across the board of what all these different companies and organizations, banks, lenders, all them, what they're predicting is somewhere around 6.5 to 6% come quarter two.
Okay.
And then possibly a dip down into the 5s somewhere in quarter three or quarter four.
Okay.
Some folks are not quite as bullish on it and think that maybe we won't see 6 till like quarter three or quarter four.
Okay.
But the big thing is that the idea is that it's going to come down. It seems like most people are predicting that we are currently peaking. Either we have peaked or we are in the process.
You don't ever know until it's behind you, right?
Right. Yeah, it's all retrospective,
Sure.
and so trying to drive a car looking in the rearview mirror usually doesn't work out too well.
Sure.
But yeah, moving forward, we'll
So sometime in 2024, the middle to latter part of the year is what we're looking like for interest rates going down. Okay. So that's a little bit of an insight into our mortgage rates now and a prediction for the future. So, there are still people that need to buy homes. So what does it look like, or you're seriously considering buying a home? What does that look like for this coming winter? So as I mentioned, our inventory in this area has gone down, and historically speaking, that is looking like that will continue to be the case. What did you say about history?
History doesn't always repeat itself, but it often rhymes.
It often rhymes. So we're pretty good, like I said, educated guess. So we're seeing that there's fewer inventory, so there are fewer choices for buyers out there. However, the homes that are on the market often have sellers that are motivated, so that is a benefit to the buyer for negotiations. You would be buying in this current climate with the interest rates as they are now. However, you can, and speak to this a little more for me, Jess, refi later, right? So a lot of people are kind of buying and knowing that they will do that in the future when that becomes available, right?
Yeah, who knows what's going to happen?
Sure.
Right? Worst case scenario, it's like, kind of doomsday is a recession. That's always a possibility when we're messing with interest rates, just kind of what the U.S. is doing right now with the Fed. But if things keep moving along as they have been, then we should see rates come down. And so a lot of folks are buying now. And I think, some of what I tell my borrowers is be comfortable for a year or two at the rate that you're at. And if it happens sooner that you're able to refinance, then great.
Mm-hmm.
And also, if rates jump up 3%, you're also probably pretty happy because rates are lower comparatively.
Right? It's all relative.
It is all relative. So there's a lot of benefits from that, but basically making sure that you're managing any sort of risk financially and being prepared for a year or two at the current rate, just to be careful.
Sure. So your mortgage payment is that you can actually afford that you're not stretching it too thin and it's not sustainable, essentially, right? Yeah. Okay. And so, another thing to think about when you are buying in the winter is, you're likely going to move into that house. So what does that look like? And so that is sometimes disruptive for people, or they're worried about weather. But there are ways around that, particularly when you're working with a realtor who can kind of help make sure that your close date doesn't fall on the exact move out date where you are before. So there's just some ways that can work out to your advantage. So, or you can work around it. So keep that in mind and not let that keep you away. And right now, as I mentioned, there were fewer closings this past month. So our demand is slowing down some as well, which means there's less competition. So if you are actively looking right now, it's less likely you're going to be in a multiple offer situation. It's more likely you're going to have leverage to negotiate with the seller. And you also have a bit more time to decide. So you're not in a situation, as we were last year for many people, where they saw a home and then had to decide that day if they wanted to make an offer. And that's always stressful. So you do have the luxury of a bit more time. And I think a lot of people who are, you're making that big investment, it makes sense to compare a few homes and really think through it. And so we mentioned before about negotiating some terms. So we are in a market where we are both seeing some price reductions for the price, however, for the list price, but in addition to the price, there are other terms that you can negotiate as a buyer to make your financial position a bit more favorable, to make your loan more favorable. Can you speak to those, what you're seeing right now in a lot of deals?
Yeah, so a lot of deals that I'm seeing now, there are seller concessions. So that's been relatively consistent and pretty common from what I've been seeing this year. So that's a great way that can help with closing costs, or just various ways that you can kind of put that kind of into action.
Okay.
The other thing that we're seeing is temporary buy downs.
Oh, okay.
So
can you say what that is then?
Yeah. So the more common one is a 2-1 buy down, but there is a 3-2-1 buy down. And essentially on the temporary buy downs, what that means, let's say that your rate that you've negotiated with your lender is 7.5%. The first year, you only pay your mortgage based on 5.5%. That's where that 2 in the 2-1 buy down comes from.
Okay.
The next year, you pay the mortgage based on a 6.5% rate. That's where the 1 comes from, with the 2-1 buy down. And then after that, whatever the term of your mortgage is, you pay the 7.5%.
Okay.
Two things on that is, one, the benefit from doing something like that allows you to pay a lower mortgage rate or a mortgage payment in the short term. So if you really do believe that rates are going to come down, then doing a 2-1 buy down allows you to pay a lower mortgage payment until you refinance. Mm-hmm. So that can kind of help manage that higher cost that we're seeing right now. The important point on this, though, is you still have to qualify at whatever your term rate is.
Okay.
So if it's, say, 7.5%, then you have to qualify at 7.5%, even though you may only be paying 5.5% the first year, 6.5% the next year. You still have to be able to qualify with the lender.
So they know you can pay it.
Exactly. Even though the intent possibly is to refinance. And so you're like, well, I'm not going to be paying that anyways. At least that's the hope, right?
Of course. Yeah.
but the lender still needs to know that you're
Okay.
able to qualify.
But as long as you qualify, it's certainly giving you a few years of not as much paid out of your pocket monthly, right?
Absolutely.
So
Yeah,
that's a really good advantage for people. And we are seeing that in this market. A lot of sellers doing that, and sometimes it helps the seller too. They still get the purchase price they want, and they're able to help with that buy down, and everybody's happy. Really, it's kind of a win-win for a lot of people. So keep in mind, work with a lender who can help you craft this, and a realtor who can help you negotiate it so you can get favorable terms to get into a home right now.
Yeah.
So that's kind of what we're looking at for winter. Did I miss any other?
No, I think
the outline of buying this coming
no,
winter.
I think that's pretty good. A little bit more time. There's going to be less buyers out there.
Mm-hmm.
You are going to be subject to the current interest rates. As what they are, but it can actually be a pretty opportune environment for. Yeah,
especially if you're in a situation where you need to move, or you're really looking at doing it. It could actually end up being a good option for you. Mm-hmm. So keep it in mind. And then, versus waiting till spring, a lot of people think, oh, I'm not going to put my house on the market till spring. I'm not going to buy a house till spring or summer. People just kind of turn off. And so with that, there's a lot more homes, but there's also a lot more buyers. Mm-hmm. And so again, with looking at history, last year, at the beginning of the year of 2023, both January and February, we were in 70, 80 days on the market before a property went under contract. Now, it plummeted down to single digits in April of this past year. So if this coming 2024 is anything like that, we're going to see a significant decrease in days on the market, which means an increase in buyer demand. So, or buyer activity. So, that's a very likely scenario, especially if interest rates are going down at some point, I think mid to late next year, right?
With how high rates are going, there are quite a few people that are just waiting. Mm-hmm. So I think the supply of buyers that's sitting on the sidelines right now, I think is building.
Yeah.
And so once the rates come down to more favorable, I think we're going to see a lot more demand. And then also, if rates dip into the fives, a lot of people that are unwilling to sell their current house mm-hmm. because they get half the house, than what they had at an interest rate of 3. Yeah. I think we'll start seeing a lot more of them come out as well too.
Sure. Yeah. So what that means in terms of the buying climate is it becomes a little bit more of a frenzy. You have a bit more homes, but still a high demand, which can often, the demand is likely going to be higher than the inventory, which means you're going to have a bit more of a buying frenzy. Yeah. And so what that looks like exactly is hard to predict, but it's very likely multiple offer situations, certainly less of a time frame in making a decision, and fewer options with negotiations. So the sellers have a bit of an upper hand. The buyers are no longer able to negotiate some of the favorable terms we were just talking about. Yeah. So that's a bit more of that climate. So you kind of have to weigh what works for you, those pros and cons of, what kind of buying climate do you want to be in, or do you want to even explore winter to see if you can find that home and then find a situation that works for you? Because that could be the case for a lot of people too. If you're very interested right now.
And if you're not in a hurry, it's still, I think, good to start looking, because Absolutely. You want to be ready when that either deal comes your way,
sure,
or the perfect house.
Yeah.
The winter, there's not going to be as much supply, so mm-hmm. your options may be limited, right, as far as finding the perfect house. But if it does come on the market, you want to have all your ducks in a row to be able to jump on it.
Absolutely. And that kind of dovetails into my next question is, what do you do now? So you're thinking about it. Some people start and maybe you're just on a website every day looking at homes, but what can you actually do to make sure you're ready? So let's speak to that a little bit.
As far as getting ready to buy a home, the biggest thing that sets everybody up for success in all aspects of the transaction is getting pre-approved. Mm-hmm. And with that, getting that look early from a lender, really just being able to have time to become the strongest buyer that you can. So maybe there's some things that come up with credit, And so being able to tackle any sort of credit issues up front,
Yeah.
instead of doing it while you're under contract, which is very stressful for anybody who's experienced that.
Yeah.
As well as decreasing just debt. So if you've got a credit card that maybe you don't really use, or you could get it paid off, not really so much, maybe your credit score is fine, but when you're looking at debt to income ratios. So what I see a lot of is people who make decent amount of income, but because the rates, they are what they currently are, the debt to income ratio is actually probably one of the biggest limiters to people being able to qualify for the house that they want. So getting rid of some of that debt early, so it's not affecting debt to income ratio.
Yeah.
And then, a strong down payment.
Yeah.
So having a good down payment not only helps with your rate, but it also helps the perception of the seller if the buyer is coming into the offer with a strong down payment.
Yeah.
That'll also bring some confidence as well too. So those are definitely the areas that could be worked on ahead of time, instead of waiting, putting the cart before the horse in the sense of finding the perfect house and then trying to make everything work. Scrambling. Yeah. Which is not that uncommon,
It happens.
Because a lot of people aren't sure, right? Is now the right time, etc. And then they find the right house, and that kind of creates the right time. But if you're even on the fence with buying a home or looking for a home, now's the time to get started with the financial side of it, and that way it's just clarity going in.
Yeah, no, that makes a lot of sense. So saving up for a down payment, reducing your debt to income ratio, getting pre-qualified, finding out what your credit score is, and everything like that. And then also, speaking to a few lenders, you can shop some rates, and then speaking to a local realtor who can help you both start looking for homes and really dialing into the market. I was speaking to somebody yesterday, and I was saying, just tell me what you're interested in, because sometimes I find out about homes before they come on the market. And so, talking to somebody who understands your needs and then can help you negotiate well for, particularly if it's a home that comes up soon, you can still have a favorable deal, and making sure that all avenues of the offer are to your benefit. So did I miss anything? You have anything to add there?
No, I think the only thing that I'll add on there is even if your credit score is okay, but it's not on the high end, there are certain kind of steps in credit or credit scores that the lenders look at that provide favorable rates. So let's say you are waiting till the spring. It may not hurt to actually figure out what your credit score is right now, and actually work with somebody to say, hey, how can I get from a 720 to a 740? And see what that can do, because that can impact the rate that you're going to get. And so even if you're in an okay, you don't have horrible credit, it still doesn't hurt to just bump it up a little bit.
And that could get you a better rate, save you some money.
So especially with rates are right now.
Sure, yeah.
If you have time, then that's a way that you can make a significant impact to your overall mortgage payment.
And then you have maybe some actionable steps to do over the next few months, so you can really work on your credit, right?
Yeah.
So, okay.
Yeah, and some of it can be really pretty simple.
Okay.
Sometimes it's a heavy lift, but lots of times it's not to, get a 20, 30, 40 bump in score.
Okay. That's good to know.
Yeah.
All right. Well, thank you very much for tuning in. I'm Monica McCarthy with Home Smart Preferred Realty.
I'm Jess with Peakview Mortgage.
And thank you for watching. And I'm going to have all of our information in the notes below. Have a wonderful day.